Thank you. I think the first point that has to be made here really is that credit unions aren't banks. And as other deputies have said, this is something that we should be actually celebrating against the background of the bankruptcy that many of the rogue practices of our banks have put this country and many of its citizens in. So that's a good thing, that we have a viable financial alternative to our banking system in the forms of credit unions. An organisation which was built from the grassroots up, an organisation which provided access to finance and credit to many of our citizens who would be excluded from such services, organisations which made the difference between people being able to live with dignity and getting out of poverty and so on. And while the banks who lent recklessly have cost this state and the taxpayer so much money, our credit unions, run and operated by over 10,000 volunteers along with 5,000 staff, have actually succeeded in building up a financial giant in many ways, where only less than 50% of their reserves are actually out on loan, and where they have a facility of billions of euros sitting there, which they are offering and have offered to this state for good programmes of solidarity, job creation and so on. So I think that has to be our starting point. Credit unions have a different history and a different ethos, one designed really on involvement, on participation and on serving their members, rather than existing just for profit. And I have to say that you'd nearly wonder, with some of the provisions in this bill, whether it was a bit of an ideological assault on them as a viable alternative to banking, because some of the measures, to be quite honest, don't make any sense if we want to preserve credit unions as they are. Now, nobody is opposed to regulation. Absolutely not. I think many of the measures in the bill are absolutely fine, and there's no doubt that it is the product of a huge body of work that went on behind the scenes with the Commission and a whole number of parties involved in that process, and that is to be absolutely welcomed. But while accepting that, it doesn't mean that the bill doesn't need to be changed. And I would like to recognise the role of the Irish League of Credit Unions, who I think have done a tremendous job in terms of their input into this bill, but actually in terms of the job that they do generally on a daily basis, interacting with their members, and indeed providing a lot of the research and data in terms of poverty rates, income figures and research in terms of the economic status of citizens in this country. So I think they have a really good role to play. And I think they've articulated in the submissions that they made to all of us the reasons why some of the bill, aspects of this bill, need to be changed. And, you know, I think it was some neck, actually, of former senators to come in and basically slag them off in a disingenuous way, imply that they engaged with the Commission in a false way, when clearly it's quite obvious that many of the input they do agree with, but it's quite clear that the feedback from their members of some of the proposals were rejected when they went back to them. And that's a really healthy thing, in my opinion. It shows how democratic these organisations are. That point is backed up, actually, by the level of correspondence that we would have had, all of us, from ordinary citizens, ordinary members of the credit unions voicing their concerns in this regard. That's a really progressive thing, something you'd never see with a bank. They also make the point that there are a number of omissions of some measures which were discussed which aren't included, and some new provisions which they never discussed. So they have a legitimate right, having participated in a process, to be disappointed with some of the outcome while recognising the good in a lot of it as well. And I think our starting point on this has to be the different historic and current role being played by credit unions, and trying to transfer banking regulation and sort of somehow batter credit unions into being similar to the banks is not going to work, and some of the measures therefore are a little bit regrettable. Now, other deputies have made the point about the huge concern about the central bank legislation being foisted on them, including all of the statutory instruments. I'm aware the department has said, well, look, there's nothing to worry about that. There's only about 6 of them that actually apply to credit unions. Well, if there's only 6 of them that apply to credit unions, specify them. Why would you collectively mushroom them all into a big mass of decades of central bank legislation that potentially could be used later on to undermine some of the good work that those organisations do and hamstring them in some ways? I think they've very effectively made a point about how they need to share services and how this is maybe put forward in the bill in a bit of an imbalanced way. The sharing of services is provided for in stuff like, I suppose, employing an accountant or whatever, bidding for collective services, but where they are concerned is about the lack of input in terms at membership level, that I can't go on my holidays up to Donegal and use the credit union there. And, it isn't really good enough to say, well, sure, there's nothing there that's really stopping that, it'll be okay. If we think it's a good thing, and I think it's a good thing, then we should provide for it in the most comprehensive body of legislation yet to be envisaged in terms of credit unions. Why wouldn't we do that? And you'd have to be suspecting nearly that the only reason it's not provided for is that the banking institutions are afraid that credit unions become even more of an alternative to banks and a new way of looking at things and dealing with, and that they're a threat in that sense. So if that's not the reason, let's put it in anyway and specify it. And to be honest, there is a similar argument to be made in relation to the credit unions' offer and pointing out to the billions of euros that they sit on in monies that are not lent out, monies which could be invested in this state to help this government in a solidarity gesture, in a public works programme, to put people back to work and stimulate the economy. And we've a bit of pain in our neck listening to the other side going on about where we get the money, where will we get the money. Here is a citizens' organisation pointing out billions of euros that they have and saying we are prepared to do business, to invest in this country with our members' resources in an effective way that will benefit the entire economy. Now, it's not just good enough to say, well, sure, that could be done in any way. That should be provided for in this legislation. It would make a huge contribution to the turnaround in economic policy, a stimulus and a beginning of a change in a direction that is so badly needed as an alternative to the austerity which is clearly not working and bleeding the domestic economy dry. And I think we do need to look at that and to provide for it here, and I think it's really welcome actually that the credit unions did
just let you know you've gone a bit over your time.
Provide for that. So I think on these reasons and on the points that have been highlighted in terms of the need for democratic participation, some of the points of concern about the boards of directors and so on, that they will be dealt with at amendment stage. So I think it can be progressed in that way.
All right, Cole.